Whether you know it or not, whether you like it or not, an increasing number of important decisions about your life are now being made by computer algorithms and artificial intelligence. Algorithms suggest music or movies you might like. Algorithms customize your social media feeds and help power safety features in your car. Algorithms and AI help landlords screen potential tenants, help banks make lending decisions, and help employers screen job applications. Consumer advocates acknowledge the benefits of AI, but they also see the potential harm. They want lawmakers and regulators to put some guardrails in place to protect you. I'm Herb Weisbaum, the Consumer Man, a contributing editor at checkbook.org.
Welcome to Consumerpedia at checkbook.org. We're the nonprofit that helps consumers select services, avoid trouble, and save money. Because we don't accept any advertising or take money from any business we recommend, you can rely on checkbook.org to be completely independent and objective. Now, here's the host of Consumerpedia, America's consumer expert, the Consumer Man, Herb Weisbaum.
In this episode, the many ways companies are now using algorithms and AI, how these powerful computer programs make the marketplace less transparent and in some cases less fair, and how the massive amount of data being collected and used to make decisions about lending, employment, housing, and insurance coverage can infringe on your privacy rights. Here to talk about all that, the CEO of the Consumer Federation of America, Susan Weinstock. Susan's an old friend who's been fighting for consumer rights for generations. So nice to have you with us.
Thank you, Herb. It's always great to talk to you.
And Jennifer Chen, a senior policy counsel in the financial fairness team at Consumer Reports.
Hi, Herb. Great to be here.
For listeners, from here on out, I'm just going to say AI because algorithms and AI are becoming so intertwined. Susan, I'm going to start with you. To be clear, consumer groups are not opposed to businesses using AI technology. You just want to make sure it doesn't discriminate or violate consumer rights.
That's absolutely right. We actually see that there could be a lot of benefits to the use of AI. It could help with wealth building opportunities, help for people to age in place by having, tools, and you can see if someone falls and make sure that they're okay. It could prevent some fraud. It could expand access to credit, depending on how it's done. It might reduce human bias or reduce closing costs on a house because things will become more automated. At the same time, though, there's lots to be concerned about. There's discriminatory practices, fraud, privacy breaches. There's a black box problem because we don't know exactly how AI decision-making is happening. And so that poses a fundamental problem in actually even overseeing it. Companies could use it to be more aggressive in outreach at lower costs. Think about robocalls and things like that could get even worse than they are now.
And during this episode, we're going to talk about a number of those concerns. Should point out that without AI, companies couldn't make instant decisions about approving credit card applications at checkout or providing price quotes for insurance policies, which are things that people really like. So there is some benefit to these algorithms and AI.
Yes, that's absolutely right. There is no question about it. It could remove human bias from important decision making if you train the models on which the AI is being made to make sure that it's both fair and accurate. And those are key parts of this. It actually could reduce discrimination. It could scale monitoring and compliance on fair housing issues, help identify and prosecute fair housing violators more quickly, greater automation to the paperwork-heavy housing finance industry. Put tools in the hands of consumers so they could actually make better decisions, comparison shop, understand the benefits and advantages of particularly products and services, and make the decision that's right for them, which in some parts of the economy is very hard to do. So yes, there is no question about it that there are those potential benefits.
Consumer Reports conducted a survey to find out how average Americans feel about AI. This was a nationally representative sample of more than 2,000 adults, and it found that the majority of those surveyed are not comfortable with the use of AI in high-stakes decisions about their lives, such as landlords using AI to screen potential tenants, employers using AI to analyze video job interviews, and banks using AI to make lending decisions. Jennifer, based on CR's survey, talk a little bit more about what's making people so uncomfortable.
Well, as you noticed, Herb, it's not surprising people are pretty uncomfortable about the thought of these AI systems that they don't understand making important decisions about their lives. And this is really not surprising because it's not clear how these models are being used. Consumers don't know if there are decisions being made that are impacted by AI. They don't know what data is going into this information, and they feel powerless to do anything about these decisions.
See, our survey also found that many people are concerned that the computer programs making these important decisions could be using erroneous information, and as you pointed out, they wouldn't know it and therefore would have no way to challenge it.
That's right. So right now, there are not clear safeguards in place to really ensure that consumers are informed when AI is being used to make these consequential decisions. But more importantly, the bigger issue is that these models, they have their pros and cons. They're very complex. They're often called black box models, and they can do a lot in terms of analyzing huge amounts of data and providing more ability to predict and make decisions and increase efficiency for companies than ever before. And those do have benefits for consumers. But one of the big issues is that even companies who use these models, they don't necessarily know how they work, and they don't know how they reach their decisions. So it's difficult for consumers to be able to really understand what's going on and to know what data was used for a decision, but how it was used and how they might be able to address a decision that they don't agree with.
Time out. So you're saying that companies may be using AI and algorithms and they don't even know what's going on to make that decision that's going to be a business decision for them?
That's right. And that is probably one of the core issues with these models. It's very much a double-edged sword. And we're talking specifically in the financial sector about machine learning models, which is a more sophisticated, advanced use of AI and algorithms of the past. And these machine learning models, they can learn on their own. And again, they analyze huge amounts of data, and they can learn and improve over time and develop their own ability to find connections, make predictions. As I said, one classic example is the use of machine learning for credit underwriting. And it's a double-edged sword in all cases. If it's used well, you can expand access to finance for consumers who don't have a very well-established credit history, for example, because you can analyze different types of data in a much more efficient manner to provide loans to more people. But if it's used badly, it can result in bias and exclude consumers from credit that they deserve. And you won't be able to pinpoint why because you can't see into the model itself.
I find that incredibly scary. I assume you do too?
Yes.
Anyone who's used one of these chatbots now available to play around with, to write things or make drawings or whatever, realize that artificial intelligence can do some amazing things, but these programs don't always get it right. Sometimes they make up stuff, what's known as hallucinations. If you want some examples, just head to tech.com and check out the story AI Gone Wrong, an updated list of AI errors, mistakes, and failures. And having read some of these horror stories, Susan, it makes me nervous about trusting machines to make decisions without human oversight. Really important decisions, not just what movie to watch, but whether I get approved for a loan or how much I pay on an insurance premium or whether the landlord agrees to let me rent the apartment.
That's absolutely right. Think about somebody who wants to be an investor. It could induce an investor to behave in certain ways, manipulate them into making decisions that actually yield higher profits for the firms or as a fraud or a scam, as opposed to being in the best interest of consumers. So there's all kinds of things out there that could make the decision-making process for a human much more difficult and steer folks in ways that are really detrimental to their best interest.
But I'm concerned about the decision being made by the AI that's using erroneous information to make a decision about me. Like, I didn't have a default on my mortgage or whatever, and I have no idea the AI is using that.
That's right. That's definitely a problem, and it could make it really hard as well, and just make it really difficult for consumers to get their due and to make sure that they're getting accurate and complete information. If a loan is turned down for some reason, can they get an explanation for that? What if the data going into that decision was faulty in the first place? Is there a way for a consumer to find out that is what happened and to check the data going in? Right now, no.
Mistakes are one thing. Discrimination is something quite different. Can AI discriminate? And if so, can it be hidden from view? We're going to talk about that next. I'm Herb Weisbaum, the Consumer Man, and you're listening to Consumerpedia, powered by checkbook.org.
From tech gadgets to financial tips, travel hacks to health trends, Consumerpedia provides expert insights and practical advice to help you save time and money, avoid the scams, and stay healthy. With dozens of episodes to choose from, Consumerpedia is your guide to making informed decisions. Just go to consumerpedia.org and search by episode title or topic, such as home, travel, auto, finance, consumer protection, or technology. Checkbook's Consumerpedia podcast, consumerpedia.org. Listen and learn, and share with your friends.
So what about the argument that decisions based on algorithms are better, fairer, because it eliminates the potential biases humans have? After all, these are decisions made by machines and based on mathematical formulas. Susan, can algorithms be biased?
Well, in theory, they actually could be helpful so long as the data that goes into the decision in the algorithm is unbiased to begin with. But the problem is we don't know that. So if there's bad data going in, if it's garbage data going in, you're going to get garbage data coming out. And then the consumer is completely at the mercy of that bad data.
And the consumer doesn't know if the algorithm's biased, like somebody who might make a racial slur if you're applying for a home loan in person or something like that?
Herb, the regulators may not even know that the algorithm is biased. This is the whole black box problem, is what data is going into making this decision, and can that be put out there so that somebody can actually know the answer to that very important question?
Jennifer, is AI able to suck up data from the internet that no company would be allowed to ask for or ask about when someone fills out an application for credit or employment or rental housing?
In some ways, yes. What AI and machine learning models in particular allow companies to do is to use unstructured data that is not typically used for credit underwriting and not typically requested. So it could be things like your social media data or your mobile phone transactions. It's not typical data that's used. And again, it can have benefits in terms of expanding access to finance, but it can also have drawbacks if there is discrimination in these models and it's hard to pinpoint where the cause is.
So explain to us how algorithms can make discriminatory decisions. What's going on here?
Algorithms, they seem on the surface to be more objective and impartial. And in some ways, there is potential for algorithms and AI and machine learning models to improve on past models that were discriminatory. But in reality, there are many ways that algorithms and machine learning models can end up discriminating. The data that's used to train these models, it can be unrepresentative for certain segments of the population, for example, which means that the results of that model would be less accurate. There is historical bias in data that's fed into these models. And as many folks say, the bad data in means bad results out. So that could result in decisions that are systematically worse for certain segments of the population.
Can data be used that would not normally be allowed by federal regulators because it's a machine sucking it up?
So the issue with machine learning, one of the challenges is that especially with credit, you're not allowed to use protected characteristics such as race or gender or religion. But these models are so complex. They pull in and make their decisions based on so many different variables. And some of these variables end up being proxies for these protected characteristics. So, for example, you might have a variable like zip codes or some other variable that on its face doesn't seem like it's a protected characteristic, protected by anti-discrimination laws, but it ends up being a very close proxy for that characteristic. And if that is a key factor in the model and how it makes a decision, then it could have negative impacts on certain populations.
So the rules that were put in place when we filled out forms on paper and decisions were made by humans, the rules about what information could be collected and how it's used, those rules were created to prevent discrimination based on sex or race or ethnic background. How can these rules be enforced when the regulators and class action lawyers don't have a clue as to what went into making that black box decision, and probably if they even got the code, couldn't even figure out what was going on?
It's a huge problem. And so we're going to have to figure out a way to find out what is the data that goes into this algorithm, what's going into the decisions that have been made. We haven't passed any laws or really any regulations that looking at AI and how it's making decisions and how that could impact people, and to make sure that is not discriminating against people, in fields where they are supposed to be protected.
And it's not even, as I said before, it's not even just a challenge to regulators. It's a challenge to companies themselves. And frankly, I think many companies are well aware of this, and some institutions are being cautious about how they employ these models. And others are being, I think, a little too aggressive about it. There are some safeguards and some recommended emerging good practices that both companies and regulators can use to try to ensure that when they use these machine learning models, they don't result in discrimination. So, for example, you can take active steps to ensure that the data that you feed into the model is as complete and representative as possible for all different demographics. You can actively test your model to ensure that it's not using proxies for protected characteristics like race or religion or gender. And you can very actively build your model to not only optimize, for example, the performance, so the accuracy you want in terms of predicting default, for example. You can also optimize it to try to minimize the amount of disparate impact that it causes. So we at Consumer Reports, we strongly feel that these measures, these safeguards, should be required of all institutions that are using machine learning.
And as Jennifer pointed out, because artificial intelligence can suck everything up from the internet, the decisions could be made on information or factors that clearly aren't allowed by regulations, but you'd never know that the machine was using that information because you have no idea what's going on in this black box.
That's exactly right. I mean, think about all of the junk that's on the internet that is useless information, that steers people in the wrong direction, that gives bad information. Now throw that into an algorithm and think about how that compounds the problem even more for a consumer.
So what can be done to protect us from AI run amok? We're going to talk about that next. I'm Herb Weisbaum, the Consumer Man, and this is Consumerpedia, powered by checkbook.org.
Consumerpedia Fast Facts. An algorithm is a set of instructions that must be followed in the correct order to complete a task or solve a problem. The first algorithms were created more than 4,000 years ago by the Sumerians, Babylonians, and Assyrians, who lived in Mesopotamia, what is Iraq today. Algorithms don't need to be complex mathematical formulas. According to the website learning.com, any step-by-step process that is completed the same way every time is an algorithm. For example, tying your shoes. There are a limited number of steps that need to be done in a specific order to get the task done. Or using a recipe when you cook. That recipe is an algorithm designed to make it possible for anyone to create specific food by following a set of detailed instructions.
Clearly, individuals don't have any real way to fight back against a world run by algorithms and AI. That's why it's up to lawmakers and regulators to create rules that protect us. Susan, what would the Consumer Federation of America like to see done?
Well, there's got to be the right balance between innovation and responsible deployment of AI. So there needs to be a robust regulatory framework that covers this, that makes the two work together in the best interest of consumers. So there's a few things that we need. We need disputability. Limiting the ability of the AI to make a final decision needs to be reviewed by regulators or experts to make sure that the decision that comes out of there is correct. There has to be fairness, that they're trained on the data is good data, and the data is done in a way that consumers can figure out what's going on. The companies that are using AI need to be able to explain and validate the decisions that are being made so that if a consumer has a question, there's a way to answer that question.
So would you test drive? Would regulators test drive algorithms or set up a process to make sure that they're not doing discriminatory things? Or how in reality would this work?
They've got to hold the companies that are using the AI responsible and liable when scams or frauds or harm are perpetrated on consumers. So that's a fundamental piece to this, because that's going to get them to make sure that their algorithms that they're using and the AI that they're using is doing it in a responsible manner.
And how would they go about finding out that the company is using information in lieu of things like race and sex or whatever? If the AI is sucking up zip codes and that zip code happens to be a community where it tends to be African American people, you don't have to ask, are you black? You found out by the zip code. How are we going to deal with that kind of thing?
Right. Well, that's why regulators have to provide guidance and rules and advisory opinions to make sure that companies understand that this is how they need to do their work so that regulators can go back in and make sure that it's being done fairly and without discrimination.
If a company is using information other than what the consumer is providing, we fill out an application form or whatever. If it's the artificial intelligence just grabbing stuff, scraping the internet, the stuff could be wrong. Do you think the company should have to provide, here's what we base this decision on above and beyond what you, the consumer, provided to us?
Absolutely. That's a no-brainer, because otherwise, how will we ever know what information they're using? how will a consumer be able to dispute the decision that's been made?
So, Jennifer, Consumer Reports recently published recommendations for new rules and new laws that you believe are needed to protect consumers. The two big keys were transparency and increased privacy. Let's start with transparency. You want companies to make it clear to consumers that an algorithmic tool or AI is being used to make decisions about them.
Yes, there's multiple steps and safeguards that need to be put in place at the same time to safeguard consumers. One is transparency to consumers, and that involves a number of components. One is that a consumer, they should be made aware when they are subject to a decision that has been driven by AI or machine learning models. And not only that, but they should be told the specific factors that led to a decision that may have been called adverse actions. So what if they were rejected for a loan, for example, or they received a loan at an unfavorable price? A company should be able to tell them what are the main factors that led to that decision, so the consumer is empowered to do something about that and try to get a better decision in the future. We advocate for consumers to have the right to appeal to a human, a live person at that company. If they're subject to an automated decision by a machine learning model, they should have the right to appeal for human review.
So how can a company tell you the reason you were denied or didn't get the best rate or whatever if they don't even know what's going into making a decision?
That is a great question. So what I was just describing, we sometimes call that external transparency, so transparency to consumers. There's another set of safeguards that need to be put in place around internal transparency, which means a level of transparency into the model itself. None of these safeguards are well established currently, but there's a clear need to ensure that financial institutions and companies overall, they have a sufficient level of transparency into the models they're using so they can pinpoint what these key factors are that led to a decision, and more broadly, so they know how their models are working. There are increasingly techniques to try to achieve some level of transparency into these black box models. There's not yet really clear guidance on what is a sufficient level of transparency that you need to really achieve these policy objectives and to protect consumers. Nor is there any clear guidance on which of the techniques are sufficient. And we think more guidance from regulators would be helpful in this area.
And what about the issue of protecting people's privacy?
Privacy is one of the underlying factors behind so many of these models. All the machine learning models are driven by a huge amount of data that exists in the digital marketplace about all of us, about which we have little control over. What we really advocate for is strong data privacy rules that are put in place. And in particular, the best practice across the board would be to have rules on data minimization. That means any company, when you're interacting with that company, they should follow a principle of only collecting and retaining and using from you data that is necessary for the service that you are signing up for, which you would think is a very obvious and common sense approach, but that's not the standard right now. Right now, many times when you're signing up for a product, by default, a company may be collecting, as you were saying, hoovering all this data about you that is really beyond what is needed for that particular product you're purchasing.
So my fear is the genie's already out of the bottle and it's going to be really hard to put guardrails in place because this thing is already happening. Are you concerned that while the consumer world wants things done, it's important, but it's probably not going to go anywhere?
Well, it's time. I mean, the European Union has looked at it. The European Union has passed a set of rules and they are implementing those rules. There is no reason why the US can't do the same and shouldn't do the same. And why are we behind Europeans? We should be equally looking at what is in the best interest of consumers and what is going to be the best interest for all of us and for the economy. I mean, it's such a broad issue and could be so widely deployed throughout the economy. It's really incredibly important that these products are used responsibly and with the consumer end use in mind.
So we always try to end these podcasts with practical information, what the listener can do to protect themselves. But with AI and algorithms, there really isn't a whole lot you can do. We have to rely on regulators to protect us.
I think that's right. Maybe the thing to do is write your congressmen and your senators and tell them they need to do something about passing laws and rules and regulations about AI.
Well, we just scratched the surface on this issue, one that's just starting to get the attention it deserves, and we're going to keep following it for you as we move forward. I want to thank our guest, Jennifer Chen, a Senior Policy Counsel in the Financial Fairness Team at Consumer Reports.
My pleasure.
and Susan Weinstock, CEO of the Consumer Federation of America.
Thank you so much. Always a pleasure to talk to you, Herb.
And with that, we come to the end of this episode of Consumerpedia. Remember, we release new episodes every other Thursday. If you like what you heard, we hope you'll rate this episode and follow us on Apple Podcasts, Spotify, or wherever you listen to your podcasts. Another way you can support this show is to follow us on Consumerpedia on Facebook and Instagram, and at My Consumerpedia on X, formerly Twitter. I'm Herb Weisbaum. Thanks for listening.
Consumerpedia is a public service of checkbook.org. We're a unique nonprofit that helps you save money and make smarter choices. You can count on Checkbook to help you find the best services and avoid the worst, with local ratings that are accurate and unbiased. If you live in or around these 7 cities and haven't joined Checkbook yet, check us out. Boston, Chicago, Philadelphia, Seattle, San Francisco, Minneapolis-St. Paul, and Washington, D.C. To get your free 30-day subscription, go to checkbook.org/Consumerpedia. Consumerpedia, empowering consumers to save money and make smarter choices.